Well, hello and welcome to Annuity Awareness Month. June is Annuity Awareness Month, and what a great time to be in annuities. Look at that. The 10-year treasury is at 4.53 right now. Fixed rates are up across the board. Multi-year guarantee accumulation, guaranteed payment streams, and the indexed link for those people who want to lock in gains but still probably participate in the upward market movement. Well, those three are all up, and today we're just going to break down a couple of those. Let's go into some of the hot products right now. In the 3-year range, these are all fixed rate products, right? We have 545 for 3, and higher rated carriers are at 510 for 3. The 4-year, you're at 5.25 or 515. The 5 years where things start to get exciting, you're at a 570 with an A minus. You got a 550 with solid A, and down for you got 540 with an A plus. Actually, you got 540 with a couple 3 A pluses, I think. 2 A pluses and an A with a 535. So the 5 years really sweet spot, a lot of above 5%. So if you need to diversify, 6 year on 250 grand or more, you can get this 572 rate with a huge 990 year one. That's all vested, issues to older ages, guaranteed death benefit is the accumulation value. And then again, we have more 570s, 550s in that range, 570s, 550s, 540s, another 555 here. Some of these are A plus, some of them are super high band at 500,000, where you want to be with superior quality of those type of premiums anyway. Look at all those 5% on the 7-year. There's a lot. The 8-year even competitive at 535, 530, 525, all good. These are annual rates. We'll get into the compounding in a minute. 9-year, 545, 535. Look at all these great rates. 10-year up to 575 with a B++. Now, there might be higher rates out there, but I don't rep every single company. And if they're really low or small, I don't need problems. So we don't talk about them. 565 with an A rated. I like that. These also, this A rated right here at 565 has like a 2.4 or 2.6 minimum, high minimum guarantees on that. We'll talk about that as well. So yeah, that's just some MYGA rates. If you want those, you can go to my annuity expert site, and under MYGA rates, you'll see fixed annuity hot list. You click on that, it'll bring you to those. So let's just take a look at some of the products. So this is 545. This is a walkaway. As you see, it's 9870. It's a B++ company. These rates are still effective. Those are the states. It's a full death benefit. Look at that. Issues down 90. It's got a $2,000 minimum for these rates. And we're going to get into more of their rates right now. See, they also have a 5-year at 565, a 7-year at 570, and a 10-year at 575. Those all have interest-only withdrawals. If you want 10%, you drop a nickel. You go over to this column over here. So this is this column with the interest. You go over here, you drop a nickel. These are bailout rates. You can get up to 585. But if interest rates, if they drop it below 585, you can leave it, no surrender charge. But the problem is, where are you going to go in the world at that point? You might not have any place to go. I did a bunch of laddering again. This is laddering. So if you have 500,000 in each of one of these ladders, you can get these rates, 545, 570, and so on. And it tells you the guaranteed rate of return after the term. So on the 2-year, it's 10.5, 10.15, 17.26 you earn on the 3-year. As you see, you get to the 6-year at 39.62%. And all the way out at that 10-year, you're making nearly 75% on your money. So that 500,000 grows to 874. Not bad. Remember, we're just using high bands on this, so you can start these with lower, of course, or you can grow to 100,000 or grow to whatever. We grow to 250 here. So how much does it cost to put in today to have an end value of 250? So you're within all the limits and all that good stuff. So on the 2-year, it's 226, 213, 203 on the 4-year. You can see on that 6-year, you need 179, 262 to guarantee 250,000 in 6 years. That's that 39%. So that's the laddering. If you like laddering, you can go to my website and there's the laddering right here. You just click on one of those and you can type in what you need. So that's solve for premium or solve for end value. It's taking too long to pull up right now. Oh, there it goes. Hold on. So yeah, you just put in the rates and then hit calculate, and it'll give you all the features for that one. Here's our A plus rated. Look at this. It's 540. It does have a non-repeating surrender charge. It's got a full death benefit. Issue stage 85. The rates are lower in these states by 5 basis points. Has something to do with the surrender charge features. It's not available here. You can get more details and all. 2% comp up to age 75 as well. So yeah, 100,000 left to accumulate, earns $30,078, and it's free and clear. This one does have a low minimum though at only 25 basis points. So you want to watch that after the term is over. Again, you can request MYGA quotes on our site as well by going there, MYGA illustrations, and you fill out that form. Here's another A plus at 5.40%. This is actually a really good company. Very popular name. Everyone would recognize the name. It is also a walkaway, 7%, 6540. Issues to age 90, has 10% free withdrawals. It's A plus AM Best, a 90 Comdex. Really good. These are all based on $100,000, these quotes. It's much lower, under 100 for this particular one. And then again, I also have a compounding calculator on our website. If you just want to figure out what you would earn, I'm not going to go through all that, but that's basically what it looks like. You put it in and it'll give you the MYGA illustration, basically. Here's their SPIA rate updates. The lapsable, meaning you can access up to 75% of your future value. So that's like if you have a life in 20, you can access the future value of that 20 guarantee up to 75% of that. It'll reduce your payment while you accessed that 75. But should the client be alive at the end of that 20-year or that guarantee period, the payment returns to full, which FIAs don't do, and indexed annuities and their riders don't do, but immediate annuities do. So that's one thing to look at. So there's just some basic rate features they have there. Here's the non-lapsable one. It's a little bit higher. As you see, a 65-year-old life in 10. It's at about 7.79 payout rate. Again, non-lapsable. The life with refund is at 769, and the females there is at 755 on the life in 10. That's the non-lapsable. And actually, you can choose either one if you want either product. So you just want to make sure you're in the right product. Annuity Awareness Month commission special. We have a commission special this month, but we have a commission special. It's a 3% commission. We're bumping you a half a point on this one because here's why I did this one. This one was done because there's another company out there with a lower interest rate here, but with the same commission. And I see agents kind of gravitating towards that. So I figured, why not use the higher rated company, get a better interest rate, and I'll pay you the same commission that you're looking at that B++. So that's how that one works. It's not available in every state, not available in these states right here. As you can see, it's A- by AM Best, a B- with Weiss, and a 10.4 surplus. I like this company. This is one of I like this one. You can accumulate 500,000. We'll earn 147,000 in 5 years. So if you want a guaranteed 147, drop 500 in this and don't touch it for 5 years. You'll leave with 647,039. You can take also this one allows immediate systematic withdrawals. So if you have a 28-day month, you get about $1,985. A 30-day month would be that, and a 31-day month would be that. And there's 7 of them, so it would equal 15,000, right? 5 30-day months, and so your total interest only starting immediately monthly would be 25,877 off that 500, while never touching the principal, right? The principal will always remain as $500,000, right? So, yeah, if you want to talk to a client, it's like, hey, would you accept a 29% gain after 5 years? That's what 530 for 5 would give you. That's 147,000. Would you be happy with that? So just some basic questions. And if the client's like, yeah, why take a risk and try to earn more? Here's the one I was talking about. This is a 565, 100,000 or more, and it's 545 under 100, which is 10,000 or more. It's not in these states down here. But I like this one. It's a fraternal carrier with an A rating, has free withdrawals of interest. It's RMD friendly, full death benefit. The carrier is $1.26 billion in assets. It's got a 14% surplus. They're A by AM Best and C+ Weiss, and they're a fraternal. So if you know anything about this business, fraternals don't normally even get ratings, much less an A rating. Very strong, very, very, very strong there. They also have a 5-year rate at 550, 530 under 100. For 10,000, you can get 530 with a really good company. So give me a call if you have any questions on these. I have one more to talk about. This is a low commission option. It's 570. It's an A-rated company with AM Best, a B+ Y, super hard to get. 10% free withdrawals, all this good stuff. Earn 39% in 6 years with this one. Commission is low. See, it's only a 1.25% commission, so I don't get a lot of agents asking for this one, but it is available. It is available. And these rates are not as of 4/1. Those are as of 6/1. That's a typo. Here's the breakdown. If you put 100,000 in, you make 139. You earn 39,460, 39.46 on your deposit there. So that's the deferred immediate annuities. Indexed annuities, a different thing. Right now we have indexed caps, and it's Annuity Awareness Month. So if you want, you can go to my annuity YouTube page at Annuity Expert. See that right there? And if you look at the playlist, I actually have one called Annuity Awareness Month. So you can look at that. But what I wanted to talk about was in the indexed annuities, there's currently guaranteed caps. I like a guarantee. The one we talk about here, I did the ultimate challenge, and this is a case study comparing a 6% MYGA to an 11% S&P cap, both guaranteed for the term. Right now, the 11% cap is going to cap out, it looks like, probably a third time. But right now we have, as of this is being into the third year of this product, 2 caps. So the FIA is working really good, but it gives you a good example of how the guaranteed cap works. And one thing I noticed about indexed annuities throughout time is that, we can end this now, but is that renewals are the most important thing. I've seen FIAs come out with 39% first year, 30%, and then just tank out. And when you balance it out over those 10 years, when they raise the spreads or lower the participations or the caps, it's not that great. So if you can get a good high guaranteed cap on an FIA, I like that, especially S&P 500, annual reset, annual lock-in. Okay, those are very important. My favorite crediting method. Anyway, X, YouTube, LinkedIn, all that social media for the most up-to-date information. 800-373. Give me a call if you have any questions, agents. Remember, all the stuff I talk about is no fees, just insurance guarantees. Hope you're all having a great day. Today's Friday, so have a great weekend, and we'll talk to you later. Take care. Bye-bye.